Good evening, and welcome to the Crypto Overnighter. I'm Nikodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. March 24th, 2023. Sygnum is a bank in Zurich, and more importantly, they're a bank that deals with digital assets, which is why they're getting a lot of requests from crypto companies around the world, because some banks in the US that were friendly to crypto have recently failed. And so these companies are now looking for new banks to work with. Dominic Castley said that in recent weeks, they've seen a big increase in inquiries from around the world. They said that they've received many such requests from the United Arab Emirates. Now, we'll be talking about them later, and the Middle East. Castley mentioned that they're mainly getting inquiries from investors, asset managers, and blockchain projects who want to invest in different types of cryptocurrencies. He said that Sygnum is working hard to expand its client service support and compliance teams so they can take on these new clients quickly and still follow all of the relevant regulations. The collapse of Signature Bank, Silvergate Capital, and Silicon Valley Bank has caused trouble for American crypto firms who need a bank to work with, which means Sygnum has an opportunity to partner with new clients, which makes it a little sad to hear Castley explain that Sygnum has a policy not to work with clients in the US. This decision was made in 2017 so they could focus on their main markets, which is not the United States. They've stuck to this policy ever since, so they simply don't take on any clients who are people or persons from the United States. Now, Castley says that more companies are interested in working with Sygnum because Sygnum is in both Switzerland and Singapore and follows all of the relevant regulations. Additionally, Sygnum just announced that they're opening a new hub in the Middle East. This will let them offer Swiss-regulated crypto banking services in Abu Dhabi global market. They also want to be in places that are friendly to cryptocurrency. They even have a license to work in Luxembourg, but not the US. Then again, the US really isn't all that friendly to crypto. Reports suggest that law enforcement officials in South Korea have apprehended a former employee of Coin1. Coin1 is a local cryptocurrency exchange. This individual was arrested for allegedly accepting bribes amounting to $1.47 million back in 2020. The bribe was intended to ensure that particular cryptocurrencies were listed on the Coin1 platform. Prosecutors are also said to be investigating BitThumb, which is another local crypto exchange, as well as its CEO, Lee Sang-jun. The investigations into these exchanges are ongoing, with the Seoul Southern District Prosecutor's Office leading the effort. Lee is also facing accusations of bribery. So far, however, the prosecutors have not requested an arrest warrant for him. This latest report of potential bribery marks yet another negative development for South Korea's crypto industry. In recent years, the industry has faced criticism and allegations of such irregularities. The current case has raised concerns about the reliability of cryptocurrency listings on local exchanges in the country. It could have significant consequences for the digital asset industry in South Korea. South Korean authorities are making increasing efforts to regulate the rapidly expanding crypto sector. And crypto is a sector that has been plagued with multiple problems, such as hacks, frauds, and tax evasion. South Korea began its efforts to regulate the digital asset industry a few years ago. In 2017, the country's financial regulatory body banned ICOs. They also introduced rigorous rules on crypto trading to avoid possible money laundering and other illicit activities. The SEC said they want investors to be careful when buying crypto securities. According to the SEC's Office of Investors Education and Advocacy, some platforms trading crypto might not follow federal securities laws. I'm not at all surprised to hear the SEC say that. They said that on Thursday that securities brokers, dealers, investment advisors, and exchanges must register with regulators. Entities involved in lending or staking crypto assets might also be subject to federal securities laws. The SEC believes that many crypto exchanges in the US are operating as unregistered securities exchanges. Gary Gensler has said as much many times. And as we talked about last night, Coinbase got a Wells notice from the SEC. This was about a possible enforcement action related to unregistered securities. Brett Quick is the head of government affairs at the Crypto Council for Innovation. According to Quick, the SEC's potential enforcement action against Coinbase could bring clarity to the rules for the cryptocurrency industry. Quick expressed her concerns that cryptocurrency firms may move outside the US instead of adhering to these new regulations. And we don't need to look any further than to Signum to see why. Quick said that several other countries are considering both adopting cryptocurrency technology and encouraging innovation by creating clear regulations. She explained that these nations are looking to attract developers and investors in the cryptocurrency industry. Quick explained that a positive outcome for the SEC's actions against Coinbase could be that it will establish case law, and it will provide guidance on how the cryptocurrency industry should be regulated. This will help create clear rules for the industry to follow. Coinbase recently published a blog post stating that it has met with the SEC over 30 times in the last 9 months. Coinbase met with them with the aim of establishing more reasonable regulations for cryptocurrency. Now, I tell you what, I'm no lawyer, but I think things like 30 visits to the SEC's office to cooperate only to get told to talk to the hand, that's not going to bode well for the SEC. I think it's hard to say that Coinbase wasn't trying to work with the SEC, not with a record like that one. Now, Quick clarified that the issue with current regulations is not just about disclosure requirements or registration fees. She also said that some aspects of existing securities laws do not align with the unique technology of cryptocurrency. Despite the challenges facing the cryptocurrency industry in the US, Quick emphasized the importance of defining clear regulations for the industry. She feels that they need to in order to maintain the country's edge in innovation. And I have to agree with every single one of Quick's points. What the SEC is doing is wrong, but it was inevitable in the face of a weak, ineffectual Congress. The courts are going to end up doing what lawmakers should have done by now. They'll effectively legislate from the bench. Now, that's a pretty bad thing usually, but in this case, it looks like it's the best that we're going to get for a while. Fortunately, the SEC finally took on a target that can defend themselves and is willing to go to court to do so. Precedent will be set. In a remarkable announcement today, we found that Nasdaq plans to launch custody services for digital assets soon. Bloomberg reports that this will happen by the end of the second quarter of this year. According to Bloomberg's report, Nasdaq has applied for a limited purpose trust company charter from the New York Department of Financial Services for its new digital asset custody business. Ira Auerbach is the head of Nasdaq Digital Assets. He shared this information in an interview in Paris. He said the group is committed to obtaining regulatory approvals and setting up the necessary technical infrastructure. This is Nasdaq's first major foray into the crypto industry. Initially, the digital assets division will secure Bitcoin and Ether. However, the group plans to expand its services eventually. Auerbach stated that the division will offer a comprehensive suite of services for Nasdaq's digital assets. As bankruptcies have occurred within the crypto industry, traditional financial institutions have stepped up to fill the gap. Nasdaq's entry into the digital asset custody business could be significant for the crypto sector. With its large size and sterling reputation in the global exchange market, Nasdaq could increase institutional investor confidence in the crypto markets. This could pave the way for other traditional financial institutions to also become involved in the industry. And as exciting as this news may be for obvious reasons, I think everyone should learn to self-custody their own crypto. Not your keys, not your cheese. Also, not financial advice. Even if you choose not to do it, learn how to do it so you can make an informed decision. A new report says that some people who work for Binance are breaking the rules. They're said to be helping users get around cybersecurity. This report comes from a CNBC investigation. It says that people who work for Binance, both employees and volunteers, have helped customers in China break the Know Your Customer controls. The report says that China has Chinese chat rooms, and in these chat rooms, they've hosted over 220,000 people. These are users that can read information in these chat rooms that shows them how to get around the system. They can bypass KYC, residency, and verification checks. The messages come from accounts that belong to Binance workers or trained volunteers called angels. And people in the chat rooms share ways to cheat the system. They teach others how to make fake bank papers and how to lie about their address. A spokesperson for Binance said that they punished workers who broke the rules. that they weren't following the rules that Binance has set. Now, CZ hasn't said anything about this yet, not that I haven't asked, and he's usually active on social media. In the past, he has used Twitter to squash rumors, but now he has said nothing, which is unusual for the CEO as he's usually quite chatty. The backdrop for all of this, of course, is China's crackdown on cryptocurrencies that began in 2021. But as far back as 2017, Chinese people were being told that they couldn't use crypto exchanges. If Chinese users cheat the KYC system to use Binance, they could get in trouble if they're caught. Now, why is this happening? Here's what's up. The Chinese officials are still working on a digital yuan, and they want their people to start using it. They've spent millions of dollars to get this program started. A Binance spokesperson explained that employees are not allowed to help users break laws or policies. They also said that the company is investigating the allegations. Binance said that they're going to check to see if any employees have gone against the company's policies by giving suggestions that are against the rules. Binance said that they have tools to catch users in restricted areas. The exchange says that it's very unusual for people to find ways to get around those rules. They said that they have used many methods, such as AI, as well as manual checks, to stop users from breaking critical security procedures. And speaking of CBDCs, on Thursday, the Central Bank of the United Arab Emirates said that it plans to finish the initial stage of its digital currency strategy by mid-2024. This stage will involve testing the concept of wholesale and retail central bank digital currencies. The bank also disclosed that it will partner with G42 Cloud. That's one of the cloud platforms from the region. They're also partnering up with R3. And R3 is a blockchain company based in New York. These are the companies that they're working with to create the technology and infrastructure for the CBDC. According to the announcement, the Central Bank of the UAE plans to complete the first phase of their central bank digital currency, the digital dirham, within the next 12 to 15 months. This phase will consist of 3 main pillars, although the specific details were not provided. The first pillar of this strategy is the soft launch of a bridge called mBridge, and we've talked about this before. It's a joint effort between the Bank of International Settlements and the central banks of Hong Kong, the Chinese mainland, the UAE, and Thailand. mBridge aims to explore cross-border payments and multi-digital fiat transactions. The second pillar is focused on testing a bilateral CBDC bridge with India. And then the third pillar involves testing a wholesale and retail digital fiat within the country. The digital dirham was included as one of the 9 significant initiatives of the country's new Financial Infrastructure Transformation Program. The European Parliament has made progress on their anti-money laundering bill. It's expected that this bill will be voted on soon. And to put it lightly, the cryptocurrency industry was worried about the bill. However, policymakers have changed the language in the proposal about commercial payments. Multiple sources have confirmed the change. European Parliament members added an article to the bill to limit transactions to less than €1,000 unless the crypto wallet owner is fully doxed. Changes were made to the regulation draft. Those changes allowed transfers from EU-licensed crypto providers to exceed €1,000. So that limitation goes away. The original text brought a lot of backlash from the digital assets industry in Europe. They were worried that this change would create obstacles for DeFi innovation. They were also concerned it would deviate from the regulatory path outlined in other bills. Still, I'm not all that excited for the EU, even with these changes. The new version of the bill still has a cap. It's now €7,000 for cash transactions in commercial payments. Self-hosted crypto transactions have a €1,000 cap. The bill makes exceptions to the $7,000 cash limit for interpersonal payments, but not for real estate, luxury goods, or deposits into financial institutions. So I'm not real excited by the changes, but they're better than what they started with. And part of it is because the original language has been restored. That means the transaction cap applies to self-hosted addresses. That is, unless the customer gets doxed. Parliamentarians have asked the European Commission to review the commercial payments rule in 3 years. This review will align the rule with other regulations like the EU's Digital Identity Framework and the proposed Anti-Money Laundering Authority's requirements. because you know the EU is going to link your digital identity with your digital wallet and then control them both. So they've got your ID and they've got your money. That sounds fun. The text of the bill is expected to be approved by the Parliament's Committee on Civil Liberties, Justice and Home Affairs and the Committee on Economic and Monetary Affairs. After this, it will go to a plenary vote and then to interinstitutional negotiations. This will give the EU a chance to correct their errors. Greenpeace has created artwork to raise awareness about Bitcoin's environmental impact. The work was meant to be part of the campaign called Change the Code, Not the Climate. Greenpeace worked with an art activist named Benjamin von Wong for the campaign. However, Bitcoin supporters have praised the artwork and considering it a mascot. This is not what Greenpeace wanted. They didn't want the skull of Satoshi to be as cool as it is. And frankly, I think someone could make a ton of money selling desk versions of the sculpture. They did this because Greenpeace wants to change Bitcoin's consensus mechanism to a proof-of-stake model. The artwork created by Greenpeace shows a skull made of electronic waste with smoking stacks on top. It symbolizes the pollution caused by Bitcoin mining and millions of computers used for network transactions. Will Foxley is Compass Mining's media strategy director. He praised the artwork created by Greenpeace. In fact, he changed his profile picture to the skull of Satoshi. Nick Carter, co-founder of Coinmetrics, he tweeted that the artwork is the most metal Bitcoin artwork to date. And this Change the Code initiative first came to our attention about a year ago. We covered it here when Greenpeace launched the campaign in collaboration with other climate groups and Chris Larsen, the co-founder of Ripple. The campaign aims to put pressure on Bitcoin developers, miners, and the government. Greenpeace believes that 30 key entities could switch Bitcoin from proof of work to a proof of stake model if they agree to the change. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, please like, follow, subscribe, leave a rating or a review. And in the meantime, we'll see you tomorrow night.